What do I think about large signal bars? Because they do increase the risk, like bars like this, where all of a sudden you have a 19 tick bar on a day where most of the bars are like 6 ticks, 8 ticks. What do I think about those? I actually think that they're awesome. So like, for example, when I took this trade earlier, this is a 13 tick bar. So technically I had my stop loss one tick above, my order 1 tick below. So in this trade, I had a 15 tick stop loss, which of course, if you get hit on a 15 tick stop loss, that is awful, right? Just like this one was an 8 tick bar, so you only have a 10 tick stop loss. It's a big difference. Or like this one, 8 tick bar, 10 tick stop loss. So when I took this short earlier, I had a 10 tick stop loss. When I took this one, I had a 15 tick stop loss. So that can scare a lot of people, but also think of it like this. The probability of it just going to get your little scalp with a bigger stop loss is probably higher. Like the chances of it going against you 15 ticks are lower than it going in your favor 4 ticks for a little scalp. And then like obviously the runner and everything else. So when I look at it, when I look at it, I think that it's actually a positive thing when you have a big signal bar within reason. Like if there was like randomly a 30 tick bar here, then maybe that's a little different because it's moved really far at that point. So, everything's within reason and context. I think that overall, a big signal bar can be a positive thing because it does mean that there's momentum. The likelihood of it coming all the way against you and not giving you the scalp is lower, and all that stuff. So there's some positive stuff to it, but I know a lot of people get scared by it, and that's just the game, Like the important thing is we put our stops where they go because that's where we're set up. And a lot of times when you get a big signal bar, it's because there's strength there, right? So like if you think about it like this lower high closing all the way down here and having this big bar, there's some strength in this move. So having your stop loss up there, like it's probably going to get defended by everyone who's shorting right there. So that's kind of how I see it. I think it can be a positive thing within reason. Like obviously if our ATR is low and all of a sudden we get a 30 tick bar, then maybe you wait for it to break below and you drop a limit order further back. And that's something that you can do anyway. Like on a bar like this one, you're not always going to get filled if you do this. But you could let the next bar break below and drop a limit order a little further back and see if it comes back and gives you a short. So like, for example, like I entered like this right here. Let me zoom in. I entered right here, 1 tick below the bar, wherever that is. I think it was like basically right here at the EMA. I entered like 1 tick below this bar. Now what you could do is let this next bar break below it and drop your limit order like back here. And now you have a smaller stop loss. And you don't need it to go that far to get your scalp. So that's another way to play these. You will miss trades though doing that. So just keep that in mind. Sometimes it won't come back and fill you. It'll just keep going and you'll miss a lot of the best setups, the really low stress ones that just take off. You'll miss those trades. So keep that in mind when you play it that way. Hopefully that helps. Why are NQ traders so salty when I say ES is just more stable? Honestly, I don't know if it has something to do with people's ego getting in the way or wanting to feel like they're right. I think a lot of it has to do with ego, right? Like, because it's just, you can't even argue with that argument that like ES is objectively more stable than NQ. It just is. If you just pull up the charts side by side, it 100% is more stable. The ES has higher volume and lower volatility. Therefore, it is more stable. It also has a more diversified class of assets. It's not just tech stocks. So definitionally, it's going to be more stable. But people get mad at me when I talk about it, and I think it's because they don't want to feel like they're trading something that is risky. People want to feel like they're making the right decision all the time, even when it's not really the best decision. Now, you can be an NQ trader and be extremely profitable and amazing at trading and maybe do a lot better than other people who are trading ES and everything else. But that's going to be a minority of traders. For most people, trading a more stable asset just works better. And think about like long-term investing, right? If you're going to buy a more stable asset, like the entire S&P index, right? The S&P 500. We know that on average it grows at something like what, 8% a year, something like that. So it's a relatively stable long-term investment. Or like the US 30, like the top 30 companies is a pretty stable investment overall. But if you start getting penny stocks, sure, you might have 100% growth. You might have 50% growth instead of 8%. But it's more risky, right? So that's the trade-off. When you're trading something more volatile, it is more risky by definition. So that's just an important thing to note. Now, there are things that are more stable to trade than the ES. Like you could trade the YM, right? The YM. You could trade that. There's things that are more stable that have, but their volatility on those is so low that it's hard to really be an effective scalper. The ES is just that perfect balance of high volume and decent volatility. So that's why I like it. It also has a lower leverage amount or lower leverage requirement. The margin requirement is half what NQ would be or crude oil or whatever. Why are NQ traders so defensive when I question their obsession with volatility? Is it just ego, poor discipline? Is it disguised gambling habit? Do I believe they tried the ES before crying? Look, I don't know why like people get so defensive. It has to be some ego stuff, right? Like nobody likes to feel like they're being criticized, especially if they're having a bad time. So one thing that happens with a lot of traders that I've experienced over the years, because I've met a lot of traders over the years, they've come and gone in my free Discord, right? My Discord's been around for literally years. And I've had traders come and go, and I'll get these people who come in, maybe they're trading options, maybe they're trading NQ, maybe they're trading ES, maybe they're trading Bitcoin, whatever it is. And they want to feel like their strategy is the best thing ever. So they come in hoping that they can get some sort of confirmation bias to support them on the decisions that they're making, even if those are bad decisions, right? Maybe they had a couple winning trades and now they think that they've hit the jackpot and they have a strategy that's, super good. Maybe they took someone else's course and they believe that they have the holy grail. Whatever it is, they come in and they start trading. Or they start trading and they eventually somehow found their way to my free Discord. They talk about how great things are and then they say all this stuff. They defend their position. They talk about how amazing their strategy is. They don't handle any scrutiny or questions very well. And then eventually they just are disappeared to never be heard from again. And I know that if they were consistently successful, they would be hanging out and telling us that, hey, listen, I've been doing this for 6 months with this strategy. It's working amazing. Never happens. They disappear and they're gone. And they're gone like so fast. And it's no offense to them. It's just the truth. And I've seen this over time. I've seen people come and go. I also see people who, they join the paid course that I have in my paid community. They hang out for less than a month, or they hang out for a month. They take the course and then they just rule it out as, oh, this doesn't work. And it's like, you only traded this for a month. Like it takes several months to learn a strategy and be good at it. And it takes several more months to actually start to master your own behavior so that you can follow the strategy effectively. But people's egos get in the way. They want to be convinced that they're right and that they're doing all the right things, even though they're not, right? Like a lot of people are doing irresponsible stuff. Dude, I had a guy comment on one of my videos the other day and tell me that the best way to get profitable as a trader or whatever was to open up 2 prop firm accounts, go long in one direction and short in the other direction at the same time with no stop loss, with a full account size during a news release in hopes that one of them passes the evaluation period and even though the other one fails. And they're like, yeah, you pass it in like 5 seconds and then you can trade with your funded account. And I'm like, what kind of crazy idea is that for sustainability as a trader? That is like one of the worst takes I've ever heard. So the thing is, like, traders will do this all the time and they'll come into doing things and they'll defend themselves till they're blue in the face, even if they don't know what they're talking about, because they really just want to feel like they're doing the right things. But mostly it's because they're taking losses and they're in denial about it. Or they had a couple of quick wins, but overall they're not consistent and they're in denial about the fact that what they're doing doesn't work. People do this all the time. Like, how many people have you met in your life that just make bad decisions, right? That just make bad decisions and they're literally in the process of making a bad decision, and you're trying to tell them, look, this is a bad choice, right? This is a bad choice. Don't do this. And they're like, they have every which reason of why this is a good choice, even though you know that it's bad. And you're giving them logic, and they're finding some way to come up with faulty logic to confirm the bias of what they emotionally want. Dude, I've seen it so many times. I'll never forget the time I had a family member who wanted to buy a new car. And at the time, this family member was only 18 years old and had like a job that was decent, like for an 18-year-old. But like, why do you want a car payment, right? And my argument was, look, you don't have a car payment right now. You have a car that's perfectly good. You don't have a car payment on it. It's paid off. Just like save your money. Why do you want to have a car payment? And they had every which reason why they needed to buy this super expensive car and why they needed other people to co-sign on a loan for them, right? And I'm like, dude, this is not a good move. This is a bad decision overall. It's irresponsible. It's not what you should be doing. You should be saving money so you can move out on your own, do all these other things, save up, like to invest or whatever. Don't waste your money on this car payment. It's just not a good move for you. You don't need it. You have a perfectly good car. And it wasn't like a bad car. The person had a decent car. It wasn't like a car that's breaking down or anything. But I remember the family member just over and over every single time confirm, like, oh, this is why it's a good decision. This is why. And I'm giving them every reason why it's a bad decision. And they're still going forward with why it's a good decision. Look, I see traders do the exact same thing. This is built into our psychology. We don't like to be wrong as people. It's really hard for us to just be wrong and accept when we're wrong, or hear somebody that's saying something that goes against our confirmation bias. It's just hard for us psychologically because we're emotionally tied to our decisions. So that's what I think is going on overall when we get all this backlash from people all the time. And so anyway, that's my long version of that. If you were in this trade and you have a runner, so let's say you're in this trade and you get in right here, this candle goes up. There's really no reason to get out of this. Like, even if you just wait for each candle to close, like even if you just trailed behind each candle after it closed, like a tick behind each one, you would have been able to trail this thing all the way up to here. That would have been where you would have gotten closed out. Even if you just trailed one tick below each wick, and that would have been 9 points. So keep that in mind when you're in these types of setups. Like, you know, there's different ways to manage your runner. Another thing that you can do is you can draw sort of like a short-term trend line like this as it's going, and just wait until you get a close outside and then it starts going lower. So in that case, you would have moved your runner here, and it didn't actually go lower, so you still would have gotten out basically at the same place. So that's kind of how you can manage that. For me, I was ready to wrap up my day, so I actually just exited right up here. I didn't try to play a runner there because I was thinking that we might find some congestion right here, or at least like some rejection. So I just was ready to be done and take my dog for a walk, and that was the last trade of the day for me. So I didn't take a like a big runner there. But yeah, you could have managed your runner in a lot of different ways there. There you go. In a trend, let's say it's an uptrend. When you get a break outside of the bottom of the channel, the most likely situation is that it then makes a new high before it actually reverses. And it's because most breakouts fail. So most breakouts fail even if it's only a temporary failure. Now, occasionally a breakout just completely succeeds, right? If the area is like weak or whatever, but like in a strong trend, you're going to see this all the time. Like here's an example of one. We had a strong trend up. We got a close outside the bottom, and then it made a new high. I literally said this was going to happen before it even happened. So when the stream started, we were like right, I don't remember where we were, somewhere like right in here. We were in here, and then I had to walk away. And then when I came back, this little up channel was moving, and I was like, we're going to get a new high here because we need to make a new high, and then we might get a reversal. And that's exactly what happened. We made the new high right there. Now we're making a lower high, and we're getting our actual reversal. And that's because of the way that trend lines move. The thing is, like, with any trading system, like I could find any trading system, right? Like let's just make one up. Let's say I had a trading system that is based on using the MACD indicator and finding a divergence at a key support and resistance level and taking those setups. I could probably backtest it and show you how great it is. And you'd be like, wow, this guy's got like a 70% win rate strategy with like a 1 to 1.5 risk reward that works amazing. And I could probably make it seem like that. And it probably would look like that when I backtest it. And then you would try to trade it and probably have losses and tilt, right? This is what happens with every one of these types of strategies. If you have a strategy that doesn't have a high hit rate, doesn't have a high win rate, and it's reliant on like a big risk reward because your win rate's not that great, it will always cause problems for you when you go through slumps psychologically, because it's just natural, right? Like if you have a strategy that wins 60% of the time, or let's say 70, right? 70% of the time. Let's say you have a strategy that wins 70% of the time with a 1-to-1 risk reward ratio. That's a pretty sweet strategy because you're winning 7 out of 10 trades, right? Let's just say that's what you're doing. Well, the problem is, what happens when you have, inevitably, and it will happen, you have 4 or 5 losses in a row? Because it will happen. Like, just statistically, if you do 1,000 trades, like, you're probably going to have a period where you lose like 5 in a row. Like, it's going to happen. Even with like a 30%, with a 70% win rate, you will lose 3 in a row. Somewhat often that might even happen. You don't know for sure. Or you might have a period where you win 1, lose 1, win 1, lose 1, win 1, lose 2, and then you win like 8 in a row or whatever. Like, that kind of stuff will happen to you as a trader. The problem with those types of strategies is that most people just can't handle that type of time period and that type of rate. So for me, I trade what you're exactly saying right now in the chat. Easy base hits with scalps. So what I do is, like, if I took this short right here, I'm not going to try to ride this thing to the low, 1 to 3 risk reward, do some crazy thing like that, even though it did go there. What I'm going to do is scalp a bunch of profit for a tiny profit, right? If I entered right here, I'm going to take profit like right there. And then I'm going to move my stop to break even and then hopefully catch a runner. And actually on this one, I think you would have. And then probably you could either keep your runner and just wait, or you could get out down here somewhere with a runner and then you're good to go. You can do that with like an almost 100% success rate. And you're not going to have 100% runners, but you can get, you're never going to have a 100% win rate, but you can get to a point where you're winning like for like weeks in a row. I've had weeks. I've had times where I only had wins for like over 3 weeks straight. It's like, it's crazy. It sounds crazy, but it's definitely there if you're patient and you just go for scalps, right? But that's why I like this strategy and that's why I do it. I don't really mess with any of that ICT stuff. To me, it doesn't mean anything. The fair value gaps and all this other stuff, I don't think it makes any sense. To me personally, it might work for some people, but I just think that you're just arbitrarily picking a candle and going, oh, there's a gap on it. There's probably not even a gap on it on a different time frame. Like if we pulled up, let's say a 1-minute chart and a 5-minute chart and a 10-minute chart, there might be a fair value gap on the 10-minute chart that doesn't exist on the 5-minute chart because there isn't a gap there on another time frame, right? Like, so it's not, it's just, the whole thing is just kind of a little bit ridiculous to me. Look, if it works for you, then great, but I just don't think that it really is. I just don't think that it really holds a lot of weight. That's just my take on it. I had somebody leave a comment on one of my videos the other day and they said, well, you just don't understand. The price has to touch a fair value gap in order for it to move forward. That's just 100% how order flow works, and it has to happen for price to move. And I'm like, no, it doesn't. Like, that's literally not true. And I can find you thousands of examples where that's not true. Does price come back and fill gaps and fill like thin areas of volume? Yeah, of course. Price always comes back and fills thin areas of volume. All that happens when you have a fair value gap is you have an area of thin volume in one spot. Price always comes back to touch areas of thin volume. That's just going to happen. Like, they become areas of support and resistance sometimes because there's just thin volumes of people that are willing to take a trade there. If you pull up if you literally pull up the volume profile on your chart, you'll find that fair value gaps are just typically areas of low volume. Like it's not even, it doesn't even mean anything. Like you could just use the volume profile and it will give you even more accurate information than those. It's not really that significant. So it does do something, but it's not a be all end all at all, because a thin area of volume can be a 50-50. It can either be a support and resistance, or it can just be an area where a market order is going to slam completely through the order book right there until it finds an area of higher volume. And I know this because I used to be a volume profile trader. So I've looked at it for countless hours. You want to have at least twice the margin cost for each of the contracts. So if an ES contract is $500 to enter a trade. So I think you want to have a minimum of $1,000 to trade one ES contract. You realistically want more. So if you have a 10K account, you could be trading, or if you have a 15K account, you could probably be trading like 7 contracts, I'd say at the most. But I don't think that's what you would want to start trading with, right? So realistically, like with a 15K account, you're probably pretty safe to trade with 5 contracts for a little while and then grow it, and then you could start to increase from there. I think that'd be a safe way to do it. You start going to 7 contracts, you start pushing the limits a bit, because then like it's really twice the cost of that would be wait, is my math way scuffed? Hold on. 7. No, sorry, my math is totally scuffed on that. No, that's right. 7 contracts. Yeah, probably 7, because then the twice that would be 14K. So yeah, I think that so this is always debatable because it's only $500 for a contract, right? So it's like if you're trading with if you have a $1,000 account, you could theoretically trade with 1 contract. If you have a $5,000 account, you could theoretically trade with 5. If you have a $15,000 account, you could theoretically trade with 15. But I just think it's playing with fire a bit. So maybe you limit yourself to no more than 10 on a 15K account. But really, like maybe 7-ish, something like that. 5 would be a safe way to do it. But really, it's more about like what can you handle psychologically? Because if you take a hit, even on a 5 contract trade, you're going to smash a lot of your profit, right? So another way to think about it is, how much are you willing to lose on a trade? Like, do you really want to risk losing 10% of your account on a trade? Because that could happen even with 5 contracts. So you need to be aware of that possibility. So so I think it's really going to depend on how much you're going to be willing to lose, right? Goal!